Welcome back to the fourth episode of How to Trade Market Maker Models. In this video, I will talk about premium and discount. So for the summary of the video, I'm going to first explain how premium and discount work. I will then talk about why this video is important in the series. And at the end, I'm going to show you how to use premium and discount on the market. So to use premium and discount, you are first going to need a Fibonacci, right? With the 1 level, 0.5 level, and 0 level. So the red part of your Fibonacci, or the upper half, so from 0.5 to 1, is going to be your premium, and the part from 0.5 to 0, or the bottom half, is going to be your discount. And what you basically want to do is anchor your Fibonacci to the ranges in the market. Imagine that you are bullish on your daily time frame. So this is a daily time frame. Price is making higher high and higher lows. You will want to anchor your Fibonacci to the range high and the range lows. And price will move from premium to discount and discount to premium. So when price will create this range here, you will want to look for any type of PD array in discount. So it can be a breaker, an order block, a fair value gap, or something like that. You will draw your PD array, and you will want to see price to come down into your PD array in discount, to then come up again to the range high. And you will do this for every range that you see. So this is another range here. Maybe this time, you know what, it's going to be an order block right here, right? And when price creates this range, you will look for your PD array in discount, and you will want to see price come down into the PD array in discount, and then go up again to the range high. So maybe I'm going to do another example here, right? And this time it's going to be a fair value gap in discount. You will want to see price to reach down into the fair value gap, and then go up again to your range high here. Imagine now that you are bearish on your daily time frame, for example. You will want to anchor your Fibonacci once again from range high to range low, and this time you will look for PD arrays in premium, and price will then come up into your PD array in premium, and then reach for your range low or the bottom of the Fibonacci here, okay? And it's going to be exactly the same thing every time. So maybe this time it's going to be another block. Price will come into premium and then go down to your range low. I made a little graphic explanation for you. So you see that here price was trading up, then creates a low, then took out this buy side liquidity here. We can see that then price shifted structure to the downside here. So imagine this is a daily time frame, for example. Now that price created this range here, so from range high to range low, we are going to select our Fibonacci and anchor it to from the top of the range to the bottom of the range, and we will then look for PD arrays in premium. So we have first this fair value gap right here, then we also have, for example, this order block right here, and we will want to see price to come up into premium inside this PD array, and then go down for the sell side liquidity or the bottom of the range. We are now on the XY, so this is a daily chart, and imagine that with our analysis we would want to see price to reach up into this buy side liquidity over here. So we will look for ranges in the price action. We will then look for PD arrays in discount, and we will want to see price to come up and take range high every time that price came down into discount. So let's see, we have a range here from range low to range high. This time the PD array is in premium, so price will not come into discount. We will then have another range here, so from range high to range low, and if price creates a bullish candle here, we are just going to move our Fibonacci to the next candle. So let's see. No, this time it didn't. So we have this fair value gap right here. Let's see, price came down into the fair value gap. We want to see now price come up here. Okay, we have now this range right here with this fair value gap right here. Okay, so now price created another bullish candle, so we are just going to move up this Fibonacci. Price then comes down into the fair value gap. We create another range here from range low to range high. We have now this volume imbalance right there, this little PD array. Oops, sorry. Right here. Okay, so price will come down into this PD array, then go up again. Okay, so we want to see price to displace up. Now we have another range here from range low to range high, and price will then reach our target here. Price reached the target. We have now range low to range high. What is this? This is a fair value gap right here in discount, and we want to see price trade into this fair value gap in discount. So that's basically how you use premium and discount on the market. That's it for today's video. If you learned something new, make sure to leave a like, drop a comment down below, subscribe to the channel, and I will see you soon for the next episode.